Hi, it's Terry Ryder from Hotspotting, bringing you my regular weekly feature at this time, Hotspot of the Week. I'm going to do something a little bit different tonight. I'm going to focus on the property clock that's been published recently by the national firm of valuers here in Tide White, because it makes a very, very important point about property markets in Australia. It illustrates the point that we don't have a single property market in Australia, that we have many hundreds of different markets, all at different points of the cycle. And I think that point is worth making again and again and again, because we have a media which every day talks about the Australian property market and what's happening with Australian property prices, i.e. that Australian property prices are falling across the country. Not true. And what they fail to understand with their generalised commentary, aided and abetted by economists who don't get real estate, unfortunately, is that we have many different markets, and it's incredibly unhelpful and misleading to talk about a single market and Australian property prices as a single entity. So with their regular monthly report here in Tide White, a national firm of valuers with offices right around the country, each time they publish the national property clock, and they put the major markets of the country at different parts of the clock, whether they're regarded as being peak of the market, declining market, approaching the bottom, at the bottom, start of recovery, rising, approaching the peak, and then back to the peak of the market. And it's really interesting to look at, because we have the major markets of the country spread right around the property clock. So in terms of the housing markets, and we'll look first at the capital cities, they, according to their classification, their estimation, I don't agree with all their analysis, but that's not the point. The point is to illustrate the point that they have categorised the various major markets in so many different ways. Starting to decline, they have Canberra in that category as a market that they think is starting to decline. Now, two cities, not surprisingly, that they regard as declining markets, the two biggest ones, Melbourne and Sydney, and not many people would disagree with that. Then they have, approaching the bottom of the cycle, Darwin, and I certainly agree with that. I think Darwin has been through tough times in recent years, and there are signs that it's now approaching the bottom and that things will start to improve for Darwin. It has Perth at the bottom of the market. Again, I tend to agree with that. I think perhaps Perth is just a little bit beyond bottom, and now starting to nudge towards a start of recovery, if you look at all the data coming out of Perth. But their classification for Perth is bottom of the market. And then start of recovery, they've got Brisbane and rising market. That's where they put Adelaide. And approaching the peak of the market, that's where they put Hobart. So we've got the 8 capital cities, according to the classification of here in Tide White, it's 7 different stages of the cycles. So the only 2 cities that are at the same stage of the cycle, according to here in Tide White, are Sydney and Melbourne. They're both declining markets, but they've got Hobart approaching the peak, Adelaide rising, Brisbane starting recovery, Perth at the bottom of the market, Darwin approaching the bottom of the market, and Canberra, they say, starting to decline. Now, that's the housing market. If we look at the unit markets, slightly different configuration, a little bit more negative in their estimation than the housing markets. They've got a number of the capital cities, including Melbourne and Sydney, Darwin and Perth, as declining markets. It's got the Brisbane unit market approaching the bottom. Yeah, that sounds fair enough. Brisbane's been through a period of oversupply of high vacancies. Gradually, those vacancies are declining, and so we're starting to see better prospects not too far away for the Brisbane apartment market. They've got the Adelaide apartment market at the start of recovery point on the property clock, and they've got Hobart, similar to the Hobart housing market, approaching the peak of the market. So again, the capital cities of Australia spread around the property clock, although there's more on the perhaps the negative side of the property clock right now, according to here in Tide White, than is the case in the housing market. Now let's look at how they classify the regional markets that they cover. they don't cover all the regional markets, but the ones where they have a particular presence with their offices are here. And what's interesting about this is that there are a lot of regional markets on the positive side of the property clock, according to Heron Todd White. They're either at start of recovery, rising market, or approaching the peak. Now, we totally agree with that, and this is one of the points that mainstream media is missing. Economists and all the other analysts who are basically out there seeking attention and publicity without really having the motivation to be helpful to real estate consumers by providing good information. They're missing, or they're ignoring, the reality that most of the really strong rising markets in Australia right now are in regional Australia, and it deserves to be getting more airplay. Now, according to the Property Clock published by Heron Todd White Valuers, we have a lot of markets in Queensland at the start of the recovery, and I think that's an important point. We certainly see it the same way. Those markets, many of them influenced by the resources sector, have been through periods of downturn, but they have places like Mackay and Cairns, Gladstone, Townsville and the Whitsundays, all at start of recovery. And then if we move on to the locations that are classified as rising market, and what stands out here is most of the locations in regional Victoria, they classify as a rising market, and we totally agree with that. We think that regional Victoria right now is the single strongest market anywhere in Australia, and Heron Todd White, by these classifications, would tend to agree. Locations they have listed as rising markets include Albury at the border, Albury-Wodonga, Ballarat, Mildura, Shepparton, the major markets. They have the Gippsland region at the peak of the market. They also have some other regional centres around Australia as rising markets. They include Bathurst in New South Wales, Emerald and Hervey Bay in regional Queensland, and Launceston in Tasmania, one of the strongest markets anywhere in Australia right now. Launceston attracting a lot of attention from both home buyers and investors. A lot of buyers out of Melbourne, for example, looking at Launceston and looking at how affordable it is. Many suburbs with median prices in the 200,000s, great rental yields, strong regional city, rising market. Approaching the peak of the market in terms of housing and regional areas, Heron Todd White has the Sunshine Coast in that category, and also Tamworth in New South Wales. And right at the peak of the market, a number of locations in regional New South Wales, including Dubbo, Lismore, and the mid-north coast of New South Wales. It has some of the regional markets of New South Wales heading down towards decline, and I think they're probably right about that. In that classification, they've got Newcastle and Wollongong and the Illawarra region, as well as the central coast of New South Wales, either starting to decline or declining. And I would certainly agree with that. Those markets have been very strong in the last couple of years. Newcastle has probably been the strongest market in New South Wales, including Sydney, in the last 2 years, but it's past its peak and it's now sort of tipped over the other side, now starting to fade a little bit. So that's reflected in this classification of Heron Todd White. Some other markets of note that has at the bottom of the cycle: Rockhampton in Queensland, Toowoomba in Queensland, and Alice Springs in the Northern Territory, which is actually the strongest of the markets in that part of Australia. Certainly Darwin has been a struggling market for quite a while. Okay, so in that context, it's interesting to look at our newly published Cheapies with Prospects report. We've just published both our city and regional editions of Top 5 Cheapies with Prospects. And it's interesting to look at the locations we've included in the city edition, and it kind of concurs with the rankings on the Property Clock with by Heron Todd White. We have a couple of locations in the Brisbane metropolitan area in that Top 5 Cheapies with Prospects City Edition report, and Heron Todd White classifies Ipswich and Brisbane as markets at the start of recovery, and that's where we like to be for the locations that we're suggesting to people to show an interest in. Our whole modus operandi is to tell people about the markets before they become hotspots, before they peak. It's not much point in telling people about markets when they're at their peak because they missed the best time to buy. So we try to tell people before prices really rise a lot. So a couple of locations in the Brisbane metropolitan area now, top 5 cheapies with prospect. City Edition here in Hobart classifies them as start of recovery. A couple of locations also in the Adelaide metropolitan area, which according to the Herentide White Property Clock is a rising market. And then we also make mention of Darwin in that report, which according to the Herentide White Property Clock is approaching the bottom of the market. And we think, yes, that's probably true, and it's about to show better things. So probably a good time to be considering that market with prices down after several years of decline, but showing signs of getting close to that point where recovery is possible. So interesting to look at the perspective of other real estate professionals around the country, and I particularly like looking at a source like Herentide White because they're a firm of valuers. They look at things fairly dispassionately. They don't have a vested interest in talking up markets. They tell it the way it is basically, and they've classified various markets as declining, approaching bottom, at bottom, rising, peaking, etc. It's interesting to look at. But yeah, as I said at the beginning, the biggest single point to take out of that is we don't have one market. We have lots of different ones, and when you look around the country, you're seeing markets at various different parts of the cycle, put into light of that media rhetoric that everywhere's in decline. Simply isn't so. And as real estate consumers, it's pretty useful to be aware of that and helping you make your decision whether it to be buying or selling. Okay, that's this week's edition of Hotspot of the Week. Hope you found it useful and informative. If you're interested in finding out more about our Cheapies with Prospects report, the 2 editions, City and Regional, are available together as a bundle at a discounted price. So go to the hotspotting.com.au website to access that. That's it for now. Terry Ryder signing off. Let's do it again soon.